let's talk about a couple of things more about the company, but I want to kind of your view in the market in a moment, if I may. So you had a busy year, a lot of M&A last year, probably a bit exhausted, but what's your report card for 2018 look like? What would you have done differently?
For 18, I mean, you know, it's hard to like it's hard in the business because you can't hedge these liquid commodities. So if you had this crystal ball and you looked at what was really a collapse in the cobalt price from 44 down to 17, you could go back and say, oh, we would hedge this or do that, but you actually really can't. And so it's hard to look back. I mean, we raised capital at a high cobalt price, and you know, did not anticipate, frankly, that it was going to roll over as hard and as fast as it did. You wouldn't raise the money at that price in the same way because obviously, you know, there's implications there, but I mean, there's no way to hedge that. So that was the business model. We told everyone what we were going to do, and we did exactly what we told the market we were going to do. So I don't know how you can, other than just not doing the deals, I'm not sure how you can do it because unlike, say, copper, where you could actually hedge it out, with cobalt, it's just not really possible.
Right, okay. And so like you started 2 years ago, share price of?
$9 with the IPO.
Right.
Goes all the way up to
12 something.
No, above 1340.
1314, right.
And now it's kind of mid 450.
Back down. So you're
and mind you, the very important point is pull up the cobalt chart and pull up our share price chart, and it's like
for sure. These things go in cycles. But you've got a model which, okay, I think some people have been doing it for a while, but as you say, the royalty business has changed. You think this is cyclical, it's caused by commodity price, things will get better, and you're actively saying we need to give something back to the shareholders. That's the message I'm hearing.
Well, it just gives them, I mean, obviously we have a dividend policy and a buyback policy, which allows us to either give a dividend or buy back shares or do both. So that's the give back implies that, which is obviously part of the corporate policy.
Right.
But I think it's also, you know, allowing the transition from binary cobalt proxy to streaming royalty multiple. It takes time. Okay. And when I say give something back, what I really mean is to try and allow that transition to happen.
Right. But that's a message you need to share, and I guess you are sharing all around the world that we're going through this transition. We know what we're doing. We're in control. We understand the process. We just need to give it that time to get back to where we think it could be.
Exactly.
Is that fair enough? Yeah. Okay, so can we talk about the market?
Yeah, sure.
Because I want you to help our viewers and listeners understand a little bit more about what's going on with in the battery storage space and battery space generally. Okay, so commodity prices are down. Why do you think that is?
Okay, so as you say, and as I said earlier, this is a complete change in these industries. Yeah. And I'm unaware of a single automobile maker who doesn't have an EV planned or already underway. Right. And by the way, this is true in China, Korea, Japan. This is not just like Rover, right? So, so all these batteries are powered by lithium-ion batteries. Right.
So explain what's in a battery for people, just very quickly. Yeah, there are different types of batteries, but generally, what does it look like?
So the main component of a lithium-ion battery is the chemistry. And the main chemistry is a nickel manganese cobalt chemistry. Tesla uses a secondary chemistry called a nickel cobalt aluminum chemistry. It's a higher nickel chemistry.
So what are the percentage breakdowns there? I mean, what's the main
So Tesla today is kind of an 8-1-1 approximately, meaning 8 part nickel, 1 part manganese, 1 part cobalt. Right. The prevailing chemistry for the balance of the world is a 5-3-2. Over time, evolving towards 8-1-1, 6-2-2, 8-1-1. The problem is, as you reduce cobalt, you increase nickel, and the batteries become unstable and can overheat and catch fire. Like a lot of these fires are in part based on the fact that the transition from a high cobalt battery to a nickel-rich battery is complex and challenging. Right. So I actually think the industry has to get there. Like you need that transition to happen because, frankly, there's only so much cobalt out there, and while there's plenty for the coming years, I just think mathematically, if you assume that 70% of vehicles will be electric, well, actually, you're going to need a lot more nickel and a lot more cobalt. You're talking about doubling, tripling the global production of cobalt to meet the demand in 2025, 2030. And so you actually need this transition to take place. But I think what cathode makers, battery makers are finding is getting to that 811 chemistry safely and with the durable battery has proven more challenging and taken longer than people think.
So you said 70%. That's a big number there in terms of the.
Yeah, that's not like, so I'm thinking like we use like 15% in 2025.
Right. Okay.
I mean, 70%. I'm just telling you, ultimately,
right.
The world will be primarily electric. But you're going to have other. So one of the misnomers here is that like there's only one technology, and the answer is there's going to be different technologies for different segments.
Sure.
So for instance, I think automobile buses will very likely be on fuel cells. Because a fuel cell is not interesting for cars, but on a fixed route, like at a mine site would be an example.
Yeah.
An auto bus where everyone gets sent through the same station, potentially a long haul trucking where everyone's going the same route, they stop at the same station.
Yeah.
Like there's going to be uses for fuel cells, right?
Right.
Move into battery storage, lithium ion batteries. Fantastic for things like your power wall at your house where it's light and small. But if you're going to have a massive grid storage installation around a wind farm, frankly, maybe vanadium redox is going to be more interesting over time. Now, that technology is not quite there yet, but there's not going to be one brush to paint everything. This is a complete transformation.
Yeah.
And there is going to be multiple batteries, including lead acid, by the way, including zinc. There's going to be a bunch of different batteries for different applications. And this actually has implications. I think we're talking about cobalt and nickel today, but this has implications for investors who are looking at the space more broadly through the cycle. And the cycle is going to be like a decade-long cycle. There are going to be moments where potentially lead is interesting, where vanadium is interesting. The recent vanadium run actually had nothing to do with batteries. It was about steel policy in China. But like people were promoting it as batteries, unrelated, uncorrelated, right?
Yeah.
So a bigger takeaway for your investors is, there are a bunch of basic materials that are going to benefit as this thing kind of rolls out, like copper. 15% of copper demand, 2025, 2030 could be related to electrification more broadly. So this is a big macro kind of trend that's going to impact and touch a wide range of commodities.
So general acceptance in the market, that's where it's going. Is it moving at the pace that people thought it would?
Faster, way faster.
Right.
It's actually stunning how much people don't understand that point. So the Chinese numbers came out, Q1 this year, EV sales up 100% year on year. I mean, I'm unaware of any data point which isn't showing tremendous growth. And I think it's this funny thing, like have you ridden in a Tesla?
Yeah.
Okay, you have. Okay, so most people say no. So I always find it funny. I say, I'll sit there with someone that say, "Oh, it's never going to happen." Yeah. I've not heard a single person who has actually ridden in one, not owned one necessarily, ridden in one of these cars who doesn't instantly see this is the future. And by the way, I'll tell you something which I know you probably haven't done. Have you ridden in an autonomous vehicle yet?
Yeah.
Oh, you have?
Yeah.
Okay, so like when you it's rare because most people haven't because you have to like sign up for a demo. Yeah. So a fully autonomous one. I mean. It is crazy. It is amazing, and what you realize, kind of 5 minutes into, depending on who's giving you the tour, 5 minutes in, you're like, why am I even driving a car? Yeah. And so it's hard to appreciate that pace of change if, as the average person, you haven't either ridden in or experienced it. But it's sort of like the iPhone. Like take the iPhone. You say like, oh, I've got this new iPhone. Why do I need this new iPhone? I got the old iPhone. Yeah. And then, 20 minutes after you use the new iPhone, you're like, actually, this one is kind of clunky and old. Like, you can't quite articulate why. I think it's kind of the same experience, although I could articulate why. When you ride in the EV, when you ride in an autonomous vehicle, then you understand why this is happening so quickly. And that doesn't even get into the effects on the environment. That's just like a practical thing.
What do you think is driving it? I mean, obviously, like with things like the Paris Accord coming in here, and you've got governments signing up to changing the way that their energy structures are comprised. So, we've got a lot of wind farms here now, which we wouldn't have 10 years ago. So what's driving this?
I think it's very simple. Like, we're destroying the earth, right? Like I don't care, global warming, however you want to spin it. There's all this political narrative around it. The bottom line is, like, we're dumping enormous amounts of plastic into the ocean. We're burning down the forest. Like, all these things are happening factually, right? And I just think that there's a growing awareness of the damage that's being caused to the earth. I think that's part of it. And so I think people are becoming more socially aware. So that's kind of in the West. I think in China it's very practical. I think in China in particular, the Chinese government has said, look, our people in these big cities are getting asthma, lung cancer, and we need to clean up the air. And there's a bunch of ways to do it, but a very simple way is if you live in Beijing to say, if you buy internal combustion engine vehicle, it's going to take you 5 years to get a license plate, or we'll give you one if you buy an EV. Those subsidies cost the government nothing. And so I think, in China, it's very practical. In London, it's very practical. Like, it'd be interesting to look. I don't have my phone on me. You would be shocked to know that the London air quality is actually on certain days some of the worst in the world.
You're on the Strand here.
Yeah, exactly.
Yeah.
So I think governments are acknowledging and realizing the need to clean up air in major cities, and so I think that's another driver. So I think there's multiple drivers here. But what's clear is if we don't act around our environment, then there's going to be irreparable damage for future generations.
There's a lot more awareness about it. There's everywhere you look, there's a lot of, and I'd encourage people to read your PowerPoint. Actually, there's some lovely little snippets of information in there. But there's some discrepancy between this generation who are more aware or greener. That compared to the price of some of these commodities. People aren't investing into mining as much as they did.
That's because they haven't made money. Let's call a spade a spade.
So there's a discrepancy there.
Yeah, no, but people didn't make money. I mean,
so whose fault's that? Where's the fault lie?
Well, that's a very complex discussion, and there's all these changes in global capital markets with money moving towards liquidity, but mining names are relative. Like the total market cap of mining is probably less than a couple of the largest single companies on. So there's all these complex things, but if you want to distill it down to a very important point, by and large, equity investors in the big global markets are judged on an annual basis performance, right?
Right.
What happens to me this year? And that's how they get paid. That's how they're reviewed by peers. Okay. If you dig a shovel and you hit your gold or your copper, whatever you hit right now, if it's ever a mine, on average, it's not going to be a mine for 12 to 15 years.
Yeah.
Okay, so you're asking some gal or guy who gets paid based on by the end of December to take a view on what happens 15 years from now. It's good luck. And so it's you have this mismatch. You have this situation where it's literally 15 years, if ever, to a mine, and capital's duration today has gone increasingly short. It's literally, in fact, I would argue that a lot of the big funds in New York are platforms where there's daily liquidity. Forget this year. Their risk departments are looking at things and they're trading today. They're trading by lunchtime, and so it's this interesting dynamic. And then you have a move towards passive, which means that primary equity raises are harder to do because a passive investor doesn't participate in a primary equity issuance. So you have kind of all these forces coming together. And ultimately what it means, I will tell you, and I don't know if that's tomorrow or 7 years from now, forget the day, it just means it's creating the next bull market. Underinvestment, inefficient investment in the sector will ultimately mean a massive bull market. And it won't even be about, by the way, forget electric vehicles, we consume every single day. Look around this room. Everything is either mined or grown just about. And so consumers continue to consume every day and they don't recycle everything that they consume. And so because of this inefficiency in the capital market, in the longer term, you set the stage for bull markets and bubbles in this asset class over time.